Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Coming to you live from the CNBC-TV18 Motilal Oswal studios. It's Wednesday morning. It's a very hazy sort of outdoors here in Mumbai. And those of you who are tuning in from Delhi, I can tell you it's not true. It's gotten worse here in Mumbai as well over the last couple of days specifically. So something we'll report on as we go on as well. But we've got markets to track, guys. Morning.
Hi, morning guys. Yeah, absolutely. I guess that's the real negative Q. Market cues we can handle, but the fact that you're dealing with 300 plus AQI in Mumbai, very, very poor visibility, the capital also choking. It's just unfortunate. That's all one can say. And now we're looking up to the rain gods for some relief.
Well, that's right. You know, every time you heard about those visits to Delhi and people saying that it's really hazy and really polluted, well, getting a sense out here. You wake up in the morning and you just look outside the window and very, very dull. I think AQ. Oops. I hope something.
Do you guys use air purifiers at home?
Yes, two. I have two.
Discussions have started now.
So I've never used one, and I think I've come close many times in the past.
Yeah.
But this morning I was just looking. I think I was checking out. Philips makes one.
Yeah.
Sold out. On I think checking out the website, the Philips website, and a few others as well. So obviously this is a common problem across the board with many facing it.
Well, I plan ahead of time. I got the second one just a couple of months ago because I don't know. I fear this,
Yeah.
So and it's really helpful because when you go to clean it, you see the kind of the only investment I think I've made in the entire year. Worth it.
My logic so far has been maybe twisted that you got to do this. You're going to do this inside, right? But you got to step out.
Yeah.
So are you actually weakening the body a little bit to be able to deal with what is actually out there? So but now I'm not so sure looking at the situation outside. But well, that's air quality, right? And I think you're driving through a fog. Here in markets as well, you're kind of sort of driving through a fog. You don't really know, not very much clarity at all. And I think the markets are reflecting it over the last 2 or 3 days. Very indecisive. Broader markets seeing a fair bit of pain. Large caps hovering near highs even after yesterday's sell-off. So, that's essentially where we pick it up from. Now, global cues are better and better for the third day running. US equities bounced, and this is the third day straight rally. S&P 0.99%. NASDAQ ended about 0.67% higher and recovered about 1.3% intraday from a drop earlier in the day. That's the story. So actually, if you look at it, about a 2.5% intraday bounce on the NASDAQ by close. Just in terms of these stocks, large stocks, because they singularly have become so important for what the index does, right? NVIDIA, for example, ended about 3% lower on news that Meta could buy chips from Google. The TPU chips. AMD, and this is the point that I was making earlier, yesterday and day before yesterday as well, the fact that Google it's perhaps the most full stack AI company, but was not focusing so much on AI. Maybe they didn't put their energies behind it, but they got chips, they got distribution, they got social media, they've got, and of course, everything basically, right? Most integrated, vertically integrated player. And the market's been, of course, focused on which is the winner, which is the OpenAI ecosystem. But now you've got suddenly this Alphabet and Google, which perhaps are in play as well. So there is that dispersion underway as well. So it's not just sort of, if you want to play AI, this is it. I think it's getting a little more dispersed. AMD was down about 4.5%. Dell reported strong earnings after close and shares were higher. You got one more gentleman from the Fed once again calling for large interest rate cuts, but of course he's Mr. President Trump's man on the Fed. So maybe you got to discount that a little bit. Now, the more important thing is there's reports that White House National Economic Council Director Kevin Hassett has emerged as the front runner to serve as the next Fed chair. This is important because President Trump has repeatedly said that when Chair Powell retires in May, that is May of 2026, he expects rates to come down dramatically. Will it happen or not is a very, very different question, because it's not just up to the chair, it's a vote. And as we've seen in recent months, many have opposed large rate cuts, many have been in favor of it. So it looks like it's not going to be as easy if you just get your man to occupy the Fed chair's chair. Macro markets, 10-year yield down 2 basis points. Oil prices 1.5% lower, $62.5 a barrel is where we finally ended. And in terms of Russia, Ukraine, as we've been saying, and we discussed this yesterday, that we look to be closer than we've ever been to ending this war, at least a ceasefire. And Trump essentially was quoted as saying that he's going to meet Putin and Ukrainian President Zelensky when the deal is in final stages. That's the global picture, the global news flow. As I said, it's a little muddy, unclear. Here in India, I'll just leave you with supports. The Nifty, with the sell-off that we saw, ended exactly almost at the 20-day moving average, which is 25,847. And I think we ended 15-20 points above that level. We touched it, by the way, and then kind of bounced a bit. Nifty bank support is 58,398, which is the 20-day moving average for that index. And there is some distance to go before that comes into view, clearer view. So that's the picture. GIFT Nifty gives you a quick sense of how we're likely to start, and we'll pick it up from there. 100 points higher is the indicative open on GIFT Nifty. Let's go across to Nigel, who's standing by with the F&O positioning and the stats there. Nigel, over to you.
Well, the final series of the year does kick off today. That's the December series. And the bulls, they thought they had it in the month of November as well as in the November series. However, towards the end of it, you did have the bears that did fight back. And that's why you had a flattish with a marginally positive series that played out in November. But the bulls will want to end the year with a flourish. And that's the hope with regard to the December series. And if you look at the last 10-year average or thereabouts in terms of returns, it's not been too bad. The Nifty and the Nifty Bank, they have a 50% hit rate. And the average returns, hover anything between a little less than 1% on the Nifty Bank to around the Nifty at around 1.5% or thereabouts. So the bulls will be hoping for something on these lines for the December series. Now, the biggest cue is going to be the India-US trade deal. Even at the start of November, there was hope and there was some optimism that will come about. Now that time is passing, and now you'll want to see it sooner rather than later, because otherwise a sell-on news can play out once that news does come in there. So the India-US trade deal, that's going to be the key monitorable for the December series itself. Moving to the rollover picture, well, the market-wide rollover picture, that's more or less in line. However, if you compare the Nifty futures rollover and compare it with an average of the last 3 series, it's a little bit lower on that front, because the index itself, the Nifty futures open interest is lighter in comparison to the previous few series. So if you just look at it at the start of the series, that's the data point. We start December much lighter in comparison to what we have seen in the past. And that's reflected with regard to the FI positioning as well. Because the FI as well at the start of the series, they are net short, but not as net short as what we have seen in the past. In percentage terms, it's at around 85,000 contracts, while 85%. And in absolute terms, it's around 95,000 contracts. Clients on the flip side, yes, they're net long, but not as net long as what we have seen in the past. So you have the FIs that are short, the clients that are long, but not as long as what we've seen in the previous few series itself. What else is the FIs in terms of positioning? Yes, they're short in index futures, but on stock futures, they continue to remain net long. And if you're looking at the options data, the number of calls that are written at the start of the series are more than the number of puts, which is telling you at higher levels, you're expecting some kind of resistance to come in, going by the FI positioning in the F&O market, which brings us to the levels. Till the Nifty holds on to that 25,500, 25,800, which is around the 20 DMA, 25,800, you'll say that the bulls believe they want to seek higher levels. They'll want to end December with a flourish. And I won't rule that out, actually, that December could actually be a pretty okay month because the kind of selling we've seen in the last few days. Resistance, though, comes in at around 26,150 because they've gone to this level numerous times and we're getting rejected at these levels. So that becomes an important number. Data points that we're looking at, India Q2 GDP number, that'll give you a sense about domestic, the economy, how's it doing. The trade deal, as well as the US, that Fed rate cut is something that the bulls will require to see. So it's going to be an interesting series. The Nifty could hold its ground, but I'll be more interested to see the broader markets actually participate because that's been the pain point in the last few days and for the November series as well. So performance in the mid and small caps is something I'll track.
Oh, absolutely. And for the timing, actually, on that rate card, the probabilities jumped to as high as 83%.
Yeah.
If you go by the FedWatch tool, the CME FedWatch tool, that is. Market is overwhelmingly positive on the chances of a rate cut in December. Actually, we have to talk about that rate cut and also what happens with a potential final deal to end the war in Ukraine. And the US President, Mr. Trump, has announced that a deal to end this war between Russia and Ukraine is now getting, quote unquote, very close. Listen in.
I've also ended 8 wars in 9 months, and we're working on that final war. It's not easy, but I don't know. I think we're going to get there. 25,000 soldiers, Ukraine, Russia. In the last month, 25,000 soldiers have died. So I think we're getting very close to a deal. We'll find out. I thought that one would have been gone quicker. We did 8. I thought that would have been an easier one, but I think we're making progress.
Okay, yeah, well, delegations have been meeting. There were some of those so-called red lines for Ukraine, which included ceding territory. And it seems that's where some back and forth is still underway. Anyway, the other big talking point is who will be the next Fed chair? Now, U.S. Treasury Scott Bessent expects President Donald Trump to make a decision on the new Federal Reserve chairman before the Christmas holidays. In a CNBC exclusive, he said that there is one more interview to go, and he was not ready yet to speculate on who might finally get the job.
Talking to these candidates, I realized the Fed has become this very complicated operation. It's no longer just a price setting of money. There's this very complicated calculus between the monetary policy, the balance sheet, and regulatory policy. And we've really emphasized in the interviews what's the interplay for that calculus in terms of the best way forward for the American economy, and what is each person's point of view in terms of protecting the American people, protecting the economy, and moving forward with the dual mandate.
Can you give us a hint? We often talk about the two Kevins, Kevin Warsh and Kevin Hassett, being the front runners. Is that still the case?
Andrew, I'm still got one interview left, so I don't think it would be prudent to give any hints. And I think that there's very, very good chance that the president will make an announcement before Christmas. But it's his prerogative whether it's before the Christmas holidays in the New Year's. But things are moving along very well.
So maybe Christmas. Prashant, I don't know the first part of that answer on what exactly is the mandate of the Fed chair and what are the qualifications for the top job? I thought that was really convoluted. I didn't read between the lines. Listen to the White House. That seemed to be a criteria there.
Absolutely. If you remember, there was another thing where President Trump jokingly said, well, I'm going to fire you, right? And then we said, and the same thing, he said, well, he doesn't want the job. And you should have seen Treasury Secretary Scott Bessent's face. No, I don't want it because
definitely not.
I'm going to be in the firing range.
Absolutely. Well, this is not all. This was a very interesting interview. So the Treasury Secretary was also quizzed on U.S.-China relations and where things stand. Listen to what he said.
President Trump initiated the call 30 days after the historic meeting in Busan, South Korea, between the two leaders. They have a great relationship. And as far as the soybeans, the Chinese are right on schedule in terms of the cadence of their purchases. Over the next 3.5 years, we're going to see the 87.5 million metric tons purchased by the Chinese, minimum, and they are right on schedule. U.S. position on Taiwan is unchanged. And on Ukraine, President and Party Chair Xi agreed that the peace in this Ukraine conflict, they must move forward, and they agreed to work together on it. President Trump showing leadership that sort of calm things down between the two countries. And look, we're always going to be rivals. We're always going to be rivals. That's natural. But are there things we can do together? Yes. We have the relationship in a good place. President Trump is going to do a state visit to Beijing. Xi is going to come to the U.S. for a state visit. He'll also be in the U.S. for the G20 at Doral. And President Trump may attend the APEC summit in Shenzhen in November. So if there are 4 meetings during the year, I think that gives the relationship great stability, and stability is good for the American people and good for the world economy.
Okay, so lots of those points that markets around the world are watching. Trade with China specifically, Ukraine and Russia and what's really happening with the war. And of course, monetary policy and the Fed leadership change. Lots going on over there. Richard Harris, Executive Director at Port Shelter Investment Management, is joining in. Richard, good morning. I don't know if you could hear some of those sound bites, but I want to pick up on the last point, which is the market believing that 25 basis points is a near given in December. And the suggestion from the White House, the constant suggestion that the next man or woman coming in is going to be, a bit of a dove. If you could read between the lines there in what Scott Bessent was saying, how the next Fed chair needs to drive the American economy forward. Your thoughts on the monetary policy front, the 25 basis points expectation, and just how significant this decision of the Fed chair might be for the market?
Well, the Fed chair, of course, is very important decision. I hear Scott Bessent has got one phone call to make, so I'm hanging by the phone for a little while because I reckon I might have quite a good shot at it.
Are you sure, Richard, you want the job?
Oh, yes. Yeah, I think so. I'd take it any day. And probably for half of what Jay Powell's being paid.
Richard, I'm voting for you.
Good.
You have support.
All the help I can get.
Go ahead.
What would they do, which is probably more important? Yes, I think the bias is for rates to come down. I think it's been like that most of the year. And the reason they haven't come down is, of course, because the US economy has been pretty robust. We've said there's been confirmation, perhaps from analysts, that the US economy is declining and is dead, but it's been pretty strong. Employment's been strong, growth has been strong, corporate earnings have been strong, stronger than we expected. We're now seeing some weakness in these figures, some weakness in the labor market especially. And I think the Fed will take that on board. And yes, US rates are higher than most of their Western counterparties, so there is room to come down. So I think the Fed has probably taken the view that while the economy is strong, we'll keep rates high. When the economy starts to weaken, we'll bring them back. And I think that's quite the right way to do it.
Richard, the other piece, which is this Russia-Ukraine deal, and the thing is, we've heard the story before, but this time they seem very confident that they're very close to a final, deal to end the war. Is that going to be significant for the market? The market's dealing with a lot, including tariffs. It's very important for us here in India, because if the war ends and hopefully out of our 50%, we lose 25% of that tariff. But just from a global flows perspective, how should we read through into this agreement that perhaps finally setting in?
Well, there's a lot to unpack there. I think the Ukraine agreement really, the first one with Ukraine, the 28-point plan, was dead on arrival. Whether this plan will be much better is another question. The Russians have already pushed back. So I feel that the likelihood of some kind of truce is unlikely. So Trump's sorting out his 9th war in 9 months is also probably unlikely. A lot more has to happen. I think that the Russians are not going to give up their territorial ambitions unless they really have to. And there seems to be relatively little pressure on them to do so. Yes, they have issues selling their oil, but they'll continue to sell their oil. Economies adapt. Russia's been on a war footing now for 2 or 3 years. The economy's adapted to that. It'll continue to adapt to that. So I don't think they're really under any pressure to do anything. The West is, however. Europe is concerned, but seems to be relatively ineffectual. The US want to get it sorted out because then they know they're ultimately kind of on the hook if Ukraine starts to get run over. So certainly the Western side wants peace. I don't think Russia's in any hurry to sue for peace at the moment. So I don't think we're going to see a deal.
Okay, all right. Richard, just to get clarity, you're expecting a Fed cut, right?
Yes.
Okay, all right. 25 bips is what you're working with.
I'll go with the 80%ers.
All right. And what about the Bank of Japan? Do you expect them to move? That's another fear, right, from an equity market perspective, that they could perk up rates a little bit, and then that yen carry trade could could, cause a near-term blip in the equity markets as we saw the last time around as well. Your comment on that?
Yeah, I don't think the Bank of Japan's going to move, especially this time before the end of the year. They would take rather a lot to move. I don't know whether they're under any particular pressure to do so. So I think they'll probably stay pat. Which means the carry trade will carry on as it always is. One thing I had thought was that the yen would maybe be somewhat weaker as it was previously, especially in terms of Prime Minister Takahashi's stated aims to increase spending. But so far it seems to have held up okay, and I rather suspect it'll do that for the time being.
Okay, all right, Richard, we will leave it on that note for today. A lot of global cues to go with this morning, but thank you very much for making sense of it all for us.
Please remember to vote for me for Fed Chairman.
Absolutely, Richard for Fed Chair.
Vote for Richard.
All right. You have a good day. Well, with that, let's tell you what else we have lined up for you on the show. Plenty of interactions coming up at 8:35. The management of Office Space Solutions will be with us. We'll talk about how the company fared in the second quarter and how second half is looking like. At 9 a.m., Vikash Singh of ICICI Securities joins in. Yesterday, you heard the Steel Secretary talk about what next with respect to that safeguard duty. So what's the impact on companies and stocks? We'll discuss with Vikas. At 9:20, Harish Krishnan of Aditya Birla Sun Life AMC joins in. He's our market master of the day. At 9:35, we get chatting with the management of Shriram Finance, one of the best performing NBFC stocks of the year. We talk about the outlook for the company in the second half of the year. Then the management of Brigade Enterprises will be with us. 9:45, Pavitra Shankar joins in to discuss demand trends in the real estate space and the outlook for the second half. And towards the end of the show, Lata will be in conversation with Manish Sabarwal of Team Lease, Somraj Roy of CIAT, and Amit Basole of Azim Premji University to decode the impact of the 4 labor codes on corporates, job creation, and the economy.
I just saw that flash at the bottom of the screen, and I just looked up and I said,
I'll say yes.
No. I said, I shouldn't say Kevin Hassett. I said, we'll say yes if asked to be Fed Chairman, and you were all asking Richard whether he wants to be. I said, will we put out Richard say to us?
Kevin Hassett doesn't really have much of a choice. When can he really, stand up and say no? But yeah, Richard is in the...
I think there's a comment from Trump himself saying that, that...
On Richard.
He's not...
On Kevin.
We'll, as I think we heard from Scott Besson, maybe before Christmas we'll have a decision. But it's not, as I said, it's not the Fed chair. You can have the Fed chair, but his man, but you need it's a vote. And can he force enough people to sort of take that view is the question. We take a break. We're back with lots of individual stocks that we want to put out, and our research team is going to help us with that in our special top 10 segment. We're looking at NCC, Indian Overseas Bank, Zentech, United Breweries, Zydus Life, ASK Automotive, LG Equipment, Ashok Leyland, and HEG. This, of course, is our stocks which are on the back of positive news flow. Bharti is the only stock which is likely to open in the red, as you can see on the screen. Coming up.
Welcome back. So cues across Asia are very, very positive. All markets in green, and markets are up anywhere between 0.5% to as much as 2%. If you're looking at something like the South Korean Kospi, Taiwan, Hang Seng, all of those markets are up and about. So let's pull up the implied open. We've been kind of slipping in that last hour slip has become a bit of a problem for our market. Can the bulls overcome that today? We'll see. With a 100-point gap up, we'll again go right back in that resistance zone, 26,000 to 26,100. That's where the slip has been happening. Let's talk about individual stocks as well. Plenty of them to focus on today. And our team is standing by with the CNBC-TV18 list of top stocks to watch. Morning, guys. Let's start with Vivek. Vivek is telling us that there could be a block deal expected in Bharti Airtel, Vivek.
Well, that's right. So Bharti Airtel, earlier this month, you saw one of the promoter entities, that is Singtel, pared close to 1% stake. Today, it's the turn of the Bharti Group. holding company, which is known as Indian Continent Investment. They hold a little over 1.4% stake. They're looking to pay close to 0.56% stake via a block deal today. So the floor price of this particular offer is at 2,096 rupees a share. It's at a 3% discount to yesterday's close. The offer size is at a little over 800 million, translating to over 7,000 crore worth of equity that is expected to exchange hands. Given the fact that the discount is around 3%, we are going with the red, but expect this to be lapped up quite well.
Okay, we'll keep an eye out on that one. Thanks, Vivek, for that. From Vivek, hopping across to Vinny. She's here to tell us about some stocks and news. Morning, Vinny.
Hi, good morning. So firstly, we'll start with NCC. They've received an order of over 2,000 crore rupees. This is from Assam government. Mainly, this is for expansion of Guwahati Medical College and Hospital. Large order obviously improves visibility and long-term duration as well. So positive for NCC. IOB, they've got a refund of 835 crores from the Income Tax Department. This was for something that was going on in terms of a case for assessment year 22 and 23. So positive there as well. Inflow of 835 crores. Zentech Green expected here as well. They've received an order of around 108 crores defense order from the Ministry of Defense and Government of India. Obviously, this order is mainly for tank crew gurney training simulators, which is a decent market for the company as well, and that is why positive here. United Breweries, they have launched the Heineken Silver in Delhi and expanding premium beer portfolio there as well. Product will be offered across bars and retail outlets. Premium offerings coming in Delhi from United Breweries, a positive from them. Zydus Life expecting green here as well. They've received a final approval for Pamil ER tablets, which is a BP drug tablet actually. The market size of that in the US is around $24.5 million. Obviously, this is not one of those very big drugs, but still an approval and improved pipeline in the US is positive for Zydus Life.
Okay, all right. Vinny, thanks very much for that. Well, Sud is here with more stocks in news. Sud, morning.
Good morning, Prashant. So we'll start with the Ask Automotive. Promoter yesterday has sold 79 lakh shares to meet minimum public shareholding norm. But entire those 79 lakh shares were bought by SBI Mutual Fund, and that was done at a price of Rs 473 per share. Another stock that saw block deals was of LG Equipment, in which SBI Mutual Fund has bought 35 lakh shares, and that is around 2% equity, and shares changed hands at a price of Rs 483 per shares. Now keep it on two stocks, Ashok Leyland and NDL Ventures. NDL Ventures earlier used to be known as Next Digital Ventures. That's the media arm of Hinduja Group. Now today, or basically yesterday in the evening, the board of NDL Ventures has approved merger of Hinduja Leyland Finance with the company, and share swap ratio is 25:10. So 25 shares of NDL Ventures will be issued for 10 shares, every 10 shares held in Hinduja Leyland Finance. And parent entities of Hinduja Leyland Finance are Ashok Leyland, which holds around 61% stake, and Hinduja Automotive, which holds around 13% stake. Last one is HEG. Yesterday also the stock was up almost 6%, and we understand in the evening that in the block deal data, there was a mention of promoter buying shares of almost 7 lakh shares, and that was done at basically it was around 0.3% equity yesterday, and that was done in the block deal.
All right, some creeping on HEG. Thanks a lot for that, Sudarshan. And we'll try to get the management and clarify with regard to their intent on HEG, as well as they have a demerger in works. So we'll try to get more clarity. Big bounce up, though, on that stock, in yesterday's trading session. Thanks a lot, gentlemen, as well as lady, for joining in and giving us all the top stocks we need to track. Let's do a quick recap then. The ones with positive news flow: NCC, Indian Overseas Bank, Zen Technologies, United Breweries, Zydus Life, and Ask Automotive. We have LG Equipment as well as and Ashok Leyland as well as HEG, all reacting to positive news flow. Bharti Airtel will be reacting to negative news flow. That's about all the stocks here to track. But let's get an insight into the commodity market. Manisha Gupta joins us to help us out with what's going on there. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, two things really overnight which the markets are keeping an eye on. One is the U.S. data that came in overnight, whether it was about retail sales, PPI numbers, private labor data. All of that has been slightly weaker than market expectation or just about in line, and that has led to a bit of a decline in the dollar index. And then the markets are also assigning an 80% probability of a 25 basis point rate cut for the month of December. This has been supportive for metals. So whether it is about gold and silver, which have rebounded yet again, or copper, which is trading at a 2-week highs, we also are looking at aluminum prices rebounding from a 1-month lows. Iron ore prices trading at a 3-week highs as well. So while the metals are doing quite well, what is not doing well is the crude oil prices trading at a 5-week lows. This is after the U.S. president says that the negotiations are near complete for Russia-Ukraine peace agreement. And if that goes through, then you could be looking at sanctions being lifted from Russia and more oil getting into the world markets, which already are into a surplus. That is what is taking the crude oil prices weak.
Okay, we don't mind that. I mean, at an India level and at a consumer level, we don't mind that at all, Manisha. Thank you so much for joining in. Indeed, crude down about 1.5%. Let's now head back to Sudarshan, actually, because he's been going over all the interesting brokerage notes of the morning. Let's see what he's picked out for us. Which stock, Sud?
So Motilal Oswal has to return on building materials. It has initiated coverage on Century Ply with a buy call, and target here is 958 per share. Also, it has initiated coverage with neutral call on Cera Sanitary, and here target price is 5,842, and it maintains buy on Kajaria Ceramics, and target is 1,252 per share. It believes that after 2 to 3 years of slowdown, it expects building product sector to see a recovery in H2 of FY26, and that will be led by low unsold housing inventory and spillover of project launches. Also, it expects industry to benefit from expansion of real estate sector, increased government focus on infrastructure and housing, growing premiumization and urbanization, and implementation of BIS norm that promotes quality manufacturing. Nuvama has initiated coverage on premium energies with a buy call, and target is 1,270 per share. It believes that companies looking to capitalize on J-curve-like exponential growth in new energy and rising capacity, backward integration and DCR-linked realization underpin the forecast. FY26-28 revenue CAGR is seen at 49% and EBITDA CAGR is seen at 43%. It believes that margin might moderate in medium term, but integration that will help companies sustain robust growth.
Okay, all right. We'll keep all these stocks on the radar as well, Sudarshan. Thank you very much for that. Need to take a break right now, but up next we'll have Deven Choksi of Riyar Choksi FinServe joining in for some fundamental stock ideas. Also, in just a bit from now, we get chatting with the management of Office Space Solutions to discuss the road ahead for the company.
Welcome back. You're tuned into Bazaar Morning Call, and hopefully you're having a pretty good morning. Well, as promised, let's get straight to Mr. Amit Ramani, the Chairman and Managing Director at Office Space Solutions, who joins us on the show. Hi, Amit. Good morning. Good to see you in as always. And hoping that, you're safe and happy, and, this asset quality, the air quality issue is not hurting too much. Well,
we're all dealing with it, Nigel. Thank you for your wishes.
All right. Let's get to business then, Amit. You have guided for a 30% growth, I think so, in FY26, if I got that number correct. And you're talking about a marginal increase in margins as well. If you could tell us, quantify what is the expansion you're looking at? Will you see 100 basis points, increase in margins, more than that? And also, will it largely be driven by seat additions? If you could help us out.
So, Nigel, I think the guidance that we had given for FY26 was, you're right, 30% growth on the revenue.
Okay.
On the margin side, what we had already achieved in FY25 was somewhere on the IGAP level, approximately about 14% EBITDA at the IGAP level and about 37% at the Ind AS level. I think they will remain flat because this was our guidance originally for FY26, which we had already achieved in FY25. In terms of the expansion of seats, we had given a guidance of about 40,000 seats, which we had added last year in FY25. That guidance remains the same for FY26 as well. In the H1, we added about 14,000 seats, and the plan is to add about 25,000 seats. If you look at the total seat, which includes basically centers live under fit out and LOI signed, that number stands at 170,000 seats and 8.4 million square feet across 247 centers. So we are well on track to achieve that in H2 and achieve our target of 175 total thousand seats live by March of 26.
I think now with this seat addition, you'll have to throw in the air purifier as well. Because
absolutely, that comes. Most of our centers have treated fresh air. So they're already, matching the AQI of what's a habitable AQI.
Oh, interesting. All right. Good to know you're ahead on that front as well, because you can add seeds, but the lungs are calling for some kind of relief. Anyway, let's talk about the other aspects of your business. What will the exit occupancies look like? On an average, I think it was around 74%. What's the target for the year?
Yeah, so for H1 average, it was 74% for the overall business. But if you look at the occupancy for 12 months or mature centers, it was at 84%. For the year, we will look at least a 1.5% improvement, so about 75 to 75.5% for the exit for the year. So clearly, I think the occupancies are improving, and the clear indicator for that is because when we added on a base of 95,000 seats, 40,000 seats, the young seats were much larger. Now, obviously, at the base of 135,000, when you add 40, the mature seats are more than the newer seats. So I think that occupancy will certainly go up.
Amit, hi. Good morning. Good to be speaking with you. So I want to discuss margin and the levers that you have as you go forward with the seat addition plan. And I believe you're also looking at other segments like hospitality, like retail. So just walk us through what the plans are on these newer segments and what happens to the margin, because you're at around 35-36% now, halfway through the year. So are these new segments margin accretive, or will, because there's build-outs and the fit-outs, initially will it be a little margin dilutive? So what are you thinking on these new segments?
So clearly, I think, Surabhi, one of the things that always we were asked was that, what is the margin in the co-working business and what's the margin in the fit-out design and build business? And so for that, what we did was we are in the process of basically subsidizing that design and build business into a separate entity. And what it does is it allows us to focus on that business independently and grow it on its own. As a result of this business transfer agreement that will happen as a part of the subsidization, the original co-working business will have a margin improvement, because obviously it will take out some of the operating expense that are kind of mixed between the two businesses into a separate entity. So I think the co-working and the managed office business will certainly see a positive improvement. If you look at the design and build business, it's a purely services-oriented business requiring very little capital other than some working capital. So clearly, it's a high ROCE business. So overall, at the company level, it will have an improvement. Also, we have introduced furniture. We have introduced today IT services. We have introduced mobility. All of these are service-oriented, requiring very little capital. And this will have certainly an improvement on the overall ROCE for the business.
So, Amit, this is really important. Can you give us some timelines? By when will the segregation, like you're saying, you want to keep the core business separate, which will be high margin. So by when will the segregation be complete? And all of these allied services, the additional services that you described, at sort of what margin will they operate? What I'm asking is basically 12 months down the line, somewhere in FY27, what will the listed entity look like in terms of the reorganization and the subsidiaries that you'll create?
Yeah, so today about 75% of the business comes from the core co-working and the managed office business. In that 75%, about roughly 13% comes from allied services, right? Which includes basically IT services, mobility, and food and beverage, cafeteria management, those kinds of services. So those businesses, the allied services comes with a high margin. It's somewhere between 25 to 30%. And obviously that will have a positive impact as that continues to grow. In the co-working business, that allied services is tracking to about 18% of the overall revenue. In the managed office business, that is tracking to about 7-8%, blended at about 13%, which we plan to grow to almost 15 to 16% over the next 12 months. So they will have a positive impact. The 25% design and build business will get shifted into this subsidiary. And that subsidiary by itself is a high ROCE because there's no investment required. Currently, it tracks at somewhere around, I would say at the contribution margin level, somewhere around 17.5 to 18%. As we continue to go into premiumization, that will have a positive impact as well, somewhere in the 20% plus range.
Amit, there's a SBI note, which there's the new labor codes which have been announced, right? Which have gone into effect. They say that they expect a 15% increase in formalization rate about jobs post the implementation of the 4 labor codes. Have you looked at this closely, or should I mean you're also reading the same reports? Any views on this? Whether this is going to increase overall
Prashant,
employment, etc. Yeah,
it's a bit early days. We are having our teams review it, but to be, at least with the initial review, when I looked at it, we are already in the formalization mode, right? I mean, all of our teammates that are there already have, offer letters. They're already part of the, the labor code program that the government already has instilled. So I don't think it'll have any impact. But whatever impact, we will assess it and we will obviously report it back in the quarterly results.
No, I didn't mean for your cohort of people who are already with you. I meant like, does it kind of sort of boost? It goes down to the simple fact: will it allow and enable companies to hire more and do that kind of thing? That's the thing. But I guess
I look at it from a very, very positive lens. I think it is the right thing for the labor force in this country. I think simplifying the code from multiple codes to 4 simple codes, and that creates a great opportunity for people to get into the formal sector. So absolutely a positive move as I see it.
Okay. All right, Amit. We'll leave it there. Thanks very much for joining us. Good luck. Appreciate it.
All right.
Devin Choksi is with us with what he'd want you to do as we begin this new trading session. Devin, it's a bit like driving through the fog, like in Mumbai, Delhi, etc. Markets lacking conviction, really, right? What are you doing?
Hi, Prashant. Good morning. Well, to me, I think some of the large cap companies, they are appearing ready for takeoff from current levels. They have spent enough amount of time, I think, remaining on a sideways to downside, and probably, I think, showing better earnings in the second quarter ended, and also promising to show better earnings in the second half, I think, of the financial year, followed by the next year. 2 or 3 main points, I think, out there. On one side, the cost is under control, including the energy cost for the commodity companies. This is giving them a margin advantage, which up till now was lacking in the business. And on the other side, I think, though muted in the second quarter, I think some of the companies have actually shown the relative signs of strength as far as I think the growth is concerned, particularly because of the consumption rate spending that is happening in the economy. We believe that I think the higher amount of growth in the second half, followed by the improvement in the margin, which is likely to sustain. We believe that we should be seeing a better second half, and followed by, I think, next 4 quarters, that is 26-27 financial year, with higher earning growth. Given that situation, I think it makes sense possibly to buy some of the large cap companies who are showing a distinct character of, I think, showing better performance going forward. Since they have not participated enough, I think I believe that technically also it's a case for, I think, some amount of appreciation, maybe 15 to 20% kind of an upside over 12 to 15 months, distinctly possible in some of the large companies, particularly Nifty 50 stocks.
All right. Hi, Devin. Good morning. Good to see you in. Talking about the large cap, Bharti Airtel, the blocks are not stopping. Business is looking good. You have a lot of positive triggers for telecom. I recall we had a chat with Mahesh Nandulkar of Jefferies on Editors Roundtable. And he was saying that in terms of earnings, cement as well as telecom, they will deliver very good earnings growth in the next year. What's your take on Bharti Airtel? I mean, there's another block, but prospects are good. And the stock actually has been a good outperformer in the last few years.
Yes, I guess, but though most of it is in price also today at the same time, Nigel. And I believe that I think the growth is likely to continue. I think their ARPU growth in the domestic market is showing a significantly high amount of premium compared to the nearest peer, which is Jio. That is another one advantage that they're getting. African operations have started building, I think, relatively better performance over the last few quarters. And that is again giving the confidence that the company is on track as far as the global operations are concerned. But as I said, I think most of the things, including the possibility of ARPU of 300 rupees, I think is already getting into the price now. So I really do not know how much further upside one could possibly ask for. Maybe I will not rule out the possibility of 15-20% kind of an upside. I think along with the other stocks in the marketplace over next 12 to 15 months' time, even for Bharti. I think so. That should be, I think, a good call that one would like to take.
No, I think point taken there. Otherwise, I think we'll have to see where things head. Grow, Deven, any thoughts? Was one of the big volume-led gainers by the end of it. Another name, new listing, Capillary, has done pretty well since listing. I don't know if you've taken a look at it.
So, grow, Prashant, I believe that I think is again everything is in price. I think some of these consumer tech companies, be it in the space of fintechs or investech, whatever you want to call it, yes. I think they have the typical character of, showing the premium valuations in initial months, and then only after a while, I think it tapers down. Maybe it typically explains the trait of fund who wants to basically include the stock into the portfolio for the sake of balancing act, I think, in the investment portfolios. I would not like to possibly chase the expensive valuation, even though everything else looks and sounds everything absolutely convincing. Particularly the business environment for most of these companies, I think, which are looking ahead, they are looking very strong because I think today you have got about 1 lakh new demat accounts getting added into the system, which suggests that the distribution business as well as the direct brokerage business both are likely to show better for a company like Grow. In my viewpoint, I think that's a key advantage. However, I think everything is in price. I think today the valuation speaks everything. Maybe 27, 28 earning outlook is covered today in the valuations of the stock. So not very clear whether one should buy immediately or one should wait. I would rather like to wait.
All right. Okay, all right. Deven, I wanted to ask you about a couple of other names. There was so much of debate about Tata Capital, valuations they're coming at, big OFS. But another peer, AB Capital actually, that was trading at, similar or, similar ratios, but at a sharp discount. I think from the time Tata Capital has listed, this one has given 15% returns. And one of the few stocks, AB Capital, is at a 52-week high. Any view on this name and what do you like from the space?
So, Nigel, in general, we find that the consumer spending is increasing, and that is a good sign for most of the NBFC companies, particularly those companies which are having the fintech to their advantage. I would think that the 2 or 3 key drivers here. First driver, of course, I think, is how quickly you turn around the request for the loan, which means, I think, how quickly you disburse this loan. And that's where the fintech, I think, which is along with the AI, is basically, I think, is a thing which one could possibly ask for. And that's where champions like Bajaj Finance would remain relatively convincing as far as their ability to disburse loan is concerned at a faster pace compared to others. Second most important aspect is definitely about the cost, because I think that today the liability side is coming down, and those companies which are in a better position to raise money at a lower cost, I think they are ensuring that their margins are likely to remain intact. And the third, and not last but not the least, will be the non-performing asset ratio. I think, again, Bajaj Finance kind of company is leading the pack in way of, I think, disbursing loan, which is not proving expensive at the end of the day because of non-collections. So all of those issues, I think, are very positive. We remain distinctly convinced about the higher amount of spending by the consumer. And that's where some of these companies which are using fintech would be a differentiator in this space. And I think we prefer to go with those kind of companies who are basically, I think, growing faster than the average rate of growth in the industry.
Okay, all right. Devin, we'll take a quick commercial break here. Allow us to do that. We'll come right back, get you some trading ideas from our technical analysts as well. Stay tuned. Sudarshan and Mitesh on the other side. Okay, well, we got, 6 minutes to go for the pre-open session to kick off. Hormuz is here with the big movers from yesterday, which saw, heavy volume action. Hormuz, take it away.
Good morning, Prashant. And even as the markets were choppy yesterday, the new listings continued to hog the limelight, and one such name was Capillary Technologies. It's just been 3 days since the stock listed and gained on all 3 days now. It was the best day yesterday for the stock since its listing, 16% higher on the stock. Now, yesterday, 2.5 crore shares were traded similar to its listing day. Out of those 2.5 crore shares, only 18.5 lakh shares were marked for delivery. But the striking point of that in yesterday's session was the turnover, a 1,700 crore rupee turnover, which is more than double its free float market cap, which is around 820 crore rupees. And this 3-day move has taken the stock 25% above its IPO price. NTPC Green Energy, we spoke about it earlier in the day as well, the lock-in period ending, but the stock has been on a 6-day losing streak before the lock-in period ended, and there has been a substantial decline in trading volumes as well as the delivery volumes before this event. Yesterday, 37 lakh shares were traded below the 20-day average of 47 lakh, and 19.5 lakh shares marked for delivery also below the 20-day average of 28 lakh shares. In fact, the delivery percentage yesterday, which was only 51%, was the lowest in comparison to, since October 14th, in comparison to the number of shares that were traded. And the stock from its post-listing high is down around 40%. Karnataka Bank is the third one on the list, and that has continued to be in the spotlight after a key investor has bought stake in the lender. The stock is up 24% in the last 3 sessions, and in this 3-day winning streak, yesterday's volumes were the highest in that 3-day period. 5 crore shares were traded yesterday on Karnataka Bank. The 20-day average is around 65 lakh. But out of those 5 crore shares, 80 lakh shares were marked for delivery. The 20-day average of around 21 lakh shares. And even here, the 3-day turnover of around 3,000 crore rupees is almost a third of its entire market cap. And Tarson's products, we spoke about it yesterday, about the stock being on a 14-day losing streak, and it rebounded from that yesterday, gained around 12 to 13%. And Tuesday's volumes were the highest on record for the company. Close to 1.5 crore shares were traded, the 20-day average of only 1.5 lakh. But out of this 1.5 crore shares, only 26 lakh shares were marked for delivery. And Tuesday's turnover of 326 crore was almost equivalent to the entire free float market cap of the stock, which is around 350 crores.
Okay, all right, Hormuz, thanks a lot for that, and we'll keep an eye out on a few of those stocks. Well, time to slip into a short break. We'll come back, we'll get you the pre-open rates. We'll also be joined by Vikas Singh of ICICI Securities to discuss the impact of a delay in the import duty for steel companies. Stay with us.
Welcome back. 9 o'clock. So we will start getting our pre-open rates any minute. Now, remember, the Qs have been actually fairly supportive. Global markets are in a fine form this morning. All of Asia is up. Now, this will settle. This is the first rate, so let's just ignore it for a bit. We have our technical experts joining in to give us some sense of how to approach trade today. So Darshan Sukhani and Mitesh Thakkar, as always. Gentlemen, good morning to both of you. Mitesh, let me open with you. The Nifty has been disappointing the bulls last 2-3 sessions, right? We're getting that last hour slide. What would you do today?
Good morning, Survi. Be maintaining that we'll possibly see some consolidation before the markets have the strength to continue this up move and get past the all-time highs. It takes some efforts over there. So I've been advocating that it could be a range of around 25,800, 850 to about 26, 150, 200 on the upside. And maybe today, if we get it close to about 25,800, you could see some signs of reversal and then take a long position. For the timing, I'm not sure whether we'll be able to clear the all-time highs immediately, but at least if we, bounce back from levels around 25,850, then a rally or an up move to about 26,200 or thereabouts could be very likely.
Okay. Sudarshan, hi, morning. What about you? Will you be a buyer of these dips?
Yeah, good morning. Well, the Nifty has been fairly choppy, and it's also shown some signs of weakness. At least you talked about that last hour weakness for the last 2-3 days. But we are now coming close to a support level of 25,800. So that's your stop loss. I would suggest if you have long positions, stay with them. I've already given you an exit number. If you don't, a small dip today above 25,800 would be a buying opportunity, because then you are buying on a very sharp dip. So yes, today, so far as these levels hold, it's a buy on dip.
Okay, got it. Buy on dips is what Sudarshan says. Sudarshan, you go first. Tell us, what's the individual stock calls you have?
Well, it's a mix. Emphasis is a buy with a stop under 27.40. Mankind Pharma, which rarely comes in my list, is a buying opportunity with a stop under 2205. IndusInd Bank is an intraday short with a stop above 860, and Angel One is an intraday short above 2750. The very fact that I have two long and short suggests that the markets are choppy.
Okay, all right, fair enough. So that's Sudarshan's stock list. Mitesh, stocks for you. What are you going with?
I have 2 buys and 2 sells as well. IDFC Bank, appears to have completed a pullback and bounced back yesterday. That's a buy with a stop below 78 for targets of 82. Also a buy on Godrej Consumer with a stop at 1128 for targets of 1180. And on the negative side, a sell on Jindal Steel with a stop at 1041 for targets of 985. And Bharat Electronics is a sell with a stop at 417 for targets of 395.
Thanks a lot, gentlemen. We'll come back to you all for your 9:10 call. For the timing, let's move on. In an exclusive conversation, Mr. Sandeep Pondrik, the Secretary, Ministry of Steel, told CNBC-TV18 that the government's decision on safeguard duty is expected soon. He also says that he expects to see a pickup in demand and pricing will gradually improve as well. Let's listen in to some bites of the conversation we had with him yesterday.
On the safeguard duty, as you know that there is a process which was conducted by DGTR, and on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6th, 7th November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years. Which is under consideration with the government, so we can expect a decision pretty soon. There have been decisions to relax some quality control orders on BIS standards for a specific time. So for some standards, we have relaxed it, suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades and specialty grades have to be imported, so we have suspended the QCO for a year. And we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both. Short term, there may be some stress on demand-supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that the demand will catch up with supply as we move forward. So to answer your question in last one line, yes, I expect that the demand will continue to rise between 8 to 10%. The steel prices right now are at quite low level, and as the demand increases in coming months, I would presume that 26 the prices would stabilize.
All right, let's take that discussion forward then. We have Vikas Singh, Vice President at ICICI Securities, who joins us on the show. Hi Vikas, good morning. Good to see you in as always. What do you make of the Steel Secretary's comments? Mr. Pondrik is saying that it's expected soon. But what are you factoring in? Are you factoring in that safeguard duty ultimately does see the light of day? Currently, there's no safeguard duty, and that's not been the case actually for the last 20 days. I think effective November 6th is when that expired. So for 20 days, there's been no protection. You see this as a big risk that it's not going to get renewed?
Good morning, Nigel. Yes, we are also factoring in that the final duty would get implemented in some time, basically. Currently, if you look at the steel prices, they are already at a steep discount to Chinese as well as Korean imports. So effectively, if there is no safeguard duty, final safeguard duty comes in, we might see another 1,500 to 2,000 rupees price fall from current levels. Because for versus Chinese, we have already given away most of the safeguard benefit. So we are expecting that the safeguard duty would come, and we are still hopeful that this would help a little bit of price improvement, maybe by January in the flats, because flats are oversupplied at this point of time. And longs, we are expecting some price improvement from December onwards.
Okay, all right. And the longs, normally longs don't get imported. So that irrespective whether the duty notification comes or not, you're expecting a price improvement in longs. Could you tell us what is the quantum?
Yeah, so basically what our expectation is, usually December onwards is the peak construction quarter for India. This will last till April or May. So usually long prices has a tendency to go on an upward trajectory during this period. We're expecting marginal, not very high, 500 to 1,000 rupees kind of the price increase in the long segment in December.
Okay, and the price increase in flats will, will be based on whether or not the duty sees the light of day, right? Because in the near term, otherwise flats will be under pressure. We have domestic steel companies that are coming on with capacity, and now that risk of imports again opens up. Would that be a fair assessment that only if the duty comes, only then will we see a price increase?
Yes, that's correct. Yeah, that's correct.
What is the current price difference? If I look at the domestic pricing of steel and landed cost of imported steel, what is the current price difference?
So currently, if we don't count safeguard duty, then there's not much difference. But assuming if the provisional safeguard duty would have continued, then you are 12% cheaper versus Chinese and 9 to 10% cheaper versus Japanese and Korea. So that's why I said okay, we have already given away most of the safeguard benefits over the last couple of months. And currently, if safeguard doesn't come, then the Chinese would come at par and Japanese, Korea would put further pressure of 1,500 to 2,000 rupees on the prices.
Got it. All right. Okay. So I think that duty should come about to help the profitability of, the domestic guys and also keep it very, very competitive. For the time being, you're factoring in that safeguard duty should come about. And my interactions with the industry as well suggest that they're expecting to come. They believe it's a delay and it's not a cancellation. Let's hope that happens. What's your view then on ferrous as well as on the non-ferrous pack? I recall that call on Vedanta you made a couple of years ago. It was in isolation when you were very, very positive. The stock is at 500 rupees and dividend payouts have been very, very healthy from the company itself. The demerger is in the works and hopefully that sees the light of day from a shareholder perspective. What will it add if we do see that demerger go through?
Yeah, so we are still positive on Vedanta, basically. And we are also hopeful of demerger to go through because this company seems to be serious regarding demerger process. That's why they have paid SEPCO as well. So gradually they are removing the hurdles on the demerger one by one. So if demerger happens, so our current target price is closer to 580 and we'll stick to that. Regarding dividend payments going forward, I think that the next 6 month dividend payment would be a little bit low on a lower side because the company doesn't have a very high need of paying for the VRL debt repayments for the next 5 to 6 months.
Okay, all right. And your top preference would be from both the steel as well, ferrous and non-ferrous. If you could just name the stocks. Vedanta is a stock that you like with 580 target price. From the ferrous names, what do you like?
On the ferrous name, we are still constructive on Tata Steel at this point of time.
Vikas, a pleasure speaking to you. Thanks a lot for giving us an insight with how do you see the dynamics pan out. And the industry is hoping that finally we get that notification with regard to duties. Otherwise, the domestic industry could be in for some troubled times, given the kind of capacity ramp up and lack of export opportunities as well.
Absolutely. So this is an important point to watch to see if we indeed get a change on the duty and extension or something new in terms of protective measures for domestic steel players. By the way, folks, before we go on to our 9-10 calls and get set for market opening, I just want to put this out there. Today is 26/11, a date that this city of Mumbai and the country that we are in will never ever forget. So just a thought, a prayer going out to people who saved us, the forces who continue to preserve us, men like Tukaram Omble, Vijay Salaskar, Hemant Karkare, and many, many more. I just wanted to say that the city of Mumbai, the nation, will always remember 26/11.
Absolutely, Surabhi. And I think, never ever forget, of course, some of the sacrifices, as Surabhi said, really something we should all, always be thankful for. Well, I think we are sort of running into market open now. 3 minutes to go for the market session to begin. Sudarshan is with us, so is Mitesh. Gentlemen, good to have both of you back with us. Sudarshan, what would your trades be?
It will be Angel 1, intraday short in Angel 1 with a stop above 27.50.
Mitesh, what about you?
I'll go with a buy on Godrej Consumer.
Mitesh, any thoughts on Godrej Consumer is Mitesh's pick. Any thoughts on Reliance, which has been showing strength and perhaps one of the reasons why the market is it keeps coming back is because Reliance has been, yesterday also intraday it perked up, market picks up. How's this one looking at about 1540 now?
So, we've been having a bullish view on Reliance, and I think earlier it was on the buy list as well. Last couple of days I haven't given a buy here, but the highest weekly closing which Reliance did was on the 12th of July 24, which is around 1585. So I think that's the near-term to swing target, and I think around those levels of 1585, 1590 is where traders can look at booking profits.
Okay, all right. Thanks very much, Mitesh, for that, and we'll chat again soon. So that is a quick view on Reliance Industries. Well, let's talk about Bharti once again. Vivek is here to shine the spotlight on this once again. Vivek, tell us more.
Well, that's right. Like we just mentioned a little while ago, we are expecting a large trade to take place as far as the shares of Bharti Airtel is concerned. The seller here is Indian Continent Investment, which is an arm or an affiliate of the Bharti Group, the promoter entity. They held a little over 1.4% stake at the end of Q2, and today they are looking to pair close to 0.56% stake. This particular deal is expected to happen at a 3% discount to yesterday's close at 2,097 rupees a share, indicating that total value of the total block could be over 7,000 crore rupees. Remember, just earlier this month, you actually saw Singtel Group also go ahead and pair its stake in the company. So it'll be interesting to see when this particular transaction does happen in the session today.
Okay, all right. 2.6 lower on Bharti as we look at this one taking shape. Lots of deals. I mean, we reported, for example, during closing bell that there's another large block which perhaps will come with regards to Vishal Megamart. Yash put that story out, but that'll take time. It'll be perhaps in the first half of December, but it's 13% after they still own over 50% stake. And they want to bring that stake low gradually. Okay, well, let's just quickly count down to the market open. We're about 8-9 seconds out. First rates will start to come up, and then we will look at individual stocks in terms of where they're starting. 25,840 on the Nifty. You got the Nifty Bank, which is up about 0.25%. The Nifty's ticked back into the green. The sensex is in the green. Small cap index about 0.25% higher. The mid cap index will come up. Kind of absolutely flat, the mid-cap index, so a little bit more buoyant in the small-cap space. Nifty 50 heat map gives you a quick sense of where we are starting, and then we will pick up from there and look at the broader market stocks. Tata Motors passenger vehicle, there is that Sierra launch, right, which happened yesterday, and it seems to be responding a little bit this morning. Jio Finance Infi. On the other end, you got Bharti, as Vivek was just telling us. Nestle and Bajaj Finance are the others which are down, but more up than down. Clearly, and you got about 60 odd points on the Nifty to show for it. Surbhi.
That Sierra launch was such a talking point around me, and I'm sure around the city as well. And can it really reverse the fortunes for Tata Motors passenger vehicles? It is a domestic business. It's one of the biggest underperforming stocks of the year, down 50%. But today it's up 1.5% with some positivity definitely rubbing off. The other stocks, JSW Steel, Nigel was just discussing this with the analysts. Will there be another safeguard duty or some more protectionist measures? That seems to be the hope. 1.5% up on that stock as well. Tata Steel is also up about 1%. Coal India is up about 0.7%. Then there's IT, which is contributing nicely this morning. Names like Tech Mahindra, HCL Tech, and even Infosys, all of them putting on 0.5% to about 1%. Banks are not bad. The Bank Nifty is actually leading the Nifty. The gain is almost 0.4% on the Bank Nifty. So look at SBI, ICICI Bank. These are the early leaders at this point in time. On the flip side, not too many stocks to really worry about. Bharti Airtel with the block trades happening down to 2.5%. Tata Consumer and BEL. But otherwise, the Nifty is on a nice rebound note, 25,950.
Well, that's right, Surbhi. Good amount of, good move is what we're seeing on the Nifty. And the breadth of the market actually after a while, it's looking pretty okay. And hopefully by the time we end, we'll have so many stocks that are advancing. You have 2.5 stocks that are advancing for one stock that's declined. We haven't seen that in a while. A few stocks that are catching your attention. Capillary Technologies, the newly listed company. This week, the stock is up 25%. Yes, that's correct. It's up 5% today, and that takes the gain for the week to 25%. The other big mover is Tourism Finance. A lot of talk about that investor that's gone ahead and bought a large chunk in Karnataka Bank. And in fact, he has a big chunk in, tourism finance as well. So for the week, the stock is up close to around 10%. Good move is what we're seeing out there. SAIL had pulled back 10% from the recent peak. And that one's back in the green, up close to around 3% as we speak. So good move, and volume's fairly okay as well. Another stock that got crushed last week was Sammaan Capital. That one, in fact, is up close to around 2.5%. So starting off with some green. Otherwise, some of these stocks, whether you're looking at Hindustan Copper or Nalco as well, they saw a big correction when there was that, a bit of uncertainty with regard to a Fed rate cut. Last week, the probability had fallen to as low as 30%. It's back up to around 80%. So some of these metal stocks are celebrating on that front. The trade that we're waiting by for, the Bharti Airtel, that has taken place. Stock down 2.5%. Once the block gets out of the way, let's see if there's a recovery inside. And Karnataka Bank as well, cooling off. Stock is up, I think, 20% in the last 7 sessions. That one's down 1.5%. Let's see whether it stays in the red or it sees a bit of recovery.
That block has gone through, right? So 2.5% lower on Bharti, 3.5 crore shares, 0.6% equity, worth 7,400 crores. And that, of course, is the big one this morning, which Vivek, of course, has been telling us about from this morning. So there you go, that block going through. Well, I think we have Harish Krishnan now joining us to take us through what he's been doing at Birla, right? Co-CIO and Head of Equity at Aditya Birla Sun Life Asset Management Company. Harish, good to have you with us here. Thank you for joining us. We are perhaps going into, at least the mood seems to be a bit despondent when whoever you speak with. Not enough impulse for the market to come off in a meaningful way, and not enough to take it up in a meaningful way either, across the board. So what does one do? I mean, it seemed to be in a bit of a holding pattern environment across indices and maybe even some stocks.
Right, Prashant. So, close to almost all-time highs of the indices. I think this question pretty much sums up the mood of the street, because the median stock is smarting a very sharp drawdown and is nowhere close to the all-time highs that we're seeing of, say, the Nifty or the large cap indices. So I think it's more a function of the breadth of the market, and the fact that over the course of the last 2-3 years, a lot of money has chased down illiquid names, be it in the micro caps, small caps, that are all smarting from, drawdowns. So, per se, I think, we are more in the optimistic camp. We believe that earnings growth is actually starting to move up. We did have a view that come the festive season, there will be an improvement in earnings growth. The last quarter did seem to suggest an improving in the breadth of the earnings growth. And we do think that as we get into the December and the March quarter, this will further get bolstered by 1% or 2%. So as far as earnings is concerned, it's quite good. I think what plagues the broader market is also a function of significant amount of supply of paper that seems to be incessantly coming, both in the form of IPOs, wherein we've seen some very large IPO transactions from September, October, but even so in the form of various stake sale, be it by promoter groups or by private equity and venture capital. So that kind of puts a lid. Just to give you a perspective in terms of numbers out there, current supply of paper is close to about 2% of market cap on an annualized basis. This amount of paper we have never seen. The last time we saw something even remotely close to this was in 2017 end. So that gives really the problem point at this point of time is not so much about the earnings growth or fundamental stacking up, of which we think there is a lot of good things in place, but more a function of the incessant supply that's around here.
Okay, Harish, hi. Great to be speaking with you this morning. Thanks for joining in. So, what's really interesting, I think, since our last conversation is that a lot of brokers have started giving buy calls on IT. I don't know whether we can call them contrarian buy calls any longer, because a couple of them are giving those buy calls now. And I think the thesis really is that at some point, we'll be past the build-out stage of AI and we'll be in the adoption stage. And that's the argument that some of the brokers are making, sell-side brokers, that Indian IT services companies have always been very good at adopting new technology, whether it was cloud or whether it was digital. So they'll do the same with AI, and therefore we're probably past the worst. Does that argument cut ice with you?
Absolutely. In fact, we've been positive on IT services for the last 3 months or so. In fact, I do remember coming on to your Diwali show, and there were a lot of raised eyebrows at that point of time as to why we're looking at IT services as a potential dark horse trade. And our point was not so much that, we ever had a doubt that Indian IT services would adapt, because we've seen them adapt through various changes over the course of the last almost 3 decades. But more importantly, the real recipe for making money in markets is to buy at low expectations. That really is the longevity of a cycle in a good business with very capable management teams. When expectations are low is when there is a greater probability and an asymmetric nature of making money comes through. So just to give you our thesis as to why we believe IT services were a buy, was primarily that over the course of the last 3 decades, there have been only 3 points in time where the market cap share of Indian IT services, which is the market cap of Indian IT divided by the top 1,000 companies market cap, has been lower than the profit pool share of Indian IT services. There have been only 3 instances. The first instance was in 2008, amidst the global financial crisis, wherein the banks themselves were going belly up, and therefore, given that banks were the largest clients for Indian IT services, there was worry on Indian IT services existence. Second was in 2017, when there was a similar wave of digital ecosystem springing up, and there were worries that, Indian IT will not be able to adapt. And now comes the third kind of phase. Now, just because it is lower doesn't mean that, in the next 3 months, 6 months, it's going to surprise on a massive positive scale. But we do think that the risk reward is significantly in our favor when we think about from that perspective of Indian IT services. So that lies our base thesis. The second, of course, was the fact that we do think that, given rupee depreciation that we've seen from 82 to 88, 89, there is some amount of margin support of Indian IT services. And lastly, like I said, the expectations are way too low, which we think over a 3-year perspective provides us reasonable room for comfort.
All right. Hi, Arish. Good morning. Good to see you in. If you're allocating money, though, what would it be? Because the broader markets are not feeling like anything like all-time highs, right? The kind of pressure that you're seeing, if you speak it to anyone, they'll be like, my portfolio is down, whatever, 5, 10, 15, 20% as well, depending on the quality of the stocks that they have, obviously. While we are talking about 1-2% away from fresh all-time highs. Do you think it's time now that if the economy is going to recover, earnings are coming about as well? And last quarter's earnings haven't been too bad, actually. It's time actually for the broader markets to participate?
So we are constructive on markets. It's just that the nature of the markets, instead of looking at it only from the dimension of going down the market cap curve, which is that small caps will give greater returns than mid caps, greater than large caps. I think what we are likely to witness is possibly a greater direction of sectors that are going to lead the next 3-5 years of the markets. By that, what I mean is that there are at least, in our opinion, 8 or 9 key sectors which account for about 50% of profit pool of India, which have underperformed in the last 3-5 years. And that to us provides us an opportunity. Just to give you some examples of certain sectors out there. So if you think of chemicals as a space, this is a space that is underperformed despite significant amount of capex. Of course, there are global headwinds in the form of destocking, etc. But this is a space where we are increasingly positive. Similarly, if you look at insurance, that's again a space which hasn't done anything over the last 3-5 years. Almost 5 years or pre-COVID, every corporate wanted to be in insurance. Today, pretty much most of them are getting out, and the big 3 or the big 5 are really consolidating away market share. It's not that the demand penetration story ever went. It's just that through a cycle when we were to look through, I think now we are getting to a phase where expectations are quite low, and they are quite possibly likely to beat up. Similarly, if you look at, say, cement, if you look at, say, metals, if you look at IT services that we spoke about, or even the banking sector, especially on the private banking space, there are a lot of these pockets which to our mind provide us reasonable value and reasonable margin of safety. Of course, nothing is very, very cheap, but in the context of where, as you rightly put out, earnings is likely to
start tracking upwards. And the fact that these, in aggregate, if you were to look at it, these 8 or 9 sectors account for only about 40% of the total ownership by various funds. That means that this is an under-owned space, this is underperformed, and that there are tailwinds coming through in the form of earning catalyst, which we think is a heady combination as to where money can eventually go towards, and which is where I think instead of looking only from a breadth, from a small cap, micro cap, etc., participating, I think we think that it makes sense to look at it from a slightly more vantage point of sectors, and these are the sectors that we are we are allocating more of capital to.
You know, I want to ask you about platform businesses and perhaps the most profitable of them, exchange businesses. Not too many of them listed. MCX, by the way, I want to there was a flash at the bottom of the screen that MCX has crossed 10,000 rupees price for the first time. In a rare appearance, we had the new MC, not so new, but relatively new managing director at MCX with us. She spoke with my colleague Manisha Gupta. I want to just play out a quick soundbite. These are basically ambitions that she set for herself and the organization. So just listen in, and I'll come back to Harish with a question.
What I heard is, you have to be ready for 10x, right? And I think that was really a rallying cry.
A ringing thing, huh?
Yeah, and I said, and I think all of us agreed within MCX that I think that really is our goalpost now. So I think we are going for 10x, and we sort of ballpark numbers looking at something like maybe 10 billion orders a day. So that's what we're getting prepared for now. And when we look at timelines and we say, look, we want to target to 10x, 10x may not be like a single shot jump, right? So probably it's going to have 2 or 3 milestones. If I look at very headline numbers, and we've sort of quadrupled in the last 2 years. So if we say, hey, if I look at that as a potential run rate, and there could be best case, there can be like a better case, and so on and so forth. Looking at all of this, I would say we should look at a first benchmark in about 12 to 18 months as a milestone, and in 2 to 3 years, really be at the kind of levels we're talking about now.
Harish, we look at, growth in 26, 27, will it be 15, will it be 20? But when you are, when the management says, well, okay, 10x growth, how do you read it as a fund manager? So 50,000 crore market cap, they'll probably do about 1,200 crores in profits. So about 40 times, 45 times earnings this year. Your thoughts on MCX and maybe these kind of other businesses as well?
No, so I think we are very encouraged by platform businesses and the potential for operating leverage. Now, the key is where they are in a cycle. So we've seen, for example, the stock market cycle over the course of the last 5 years where volumes have shot up through the roof, be it especially on the F&O side and a bit on the cash volumes. And can we see something similar to happen on commodities as more and more Indians discover this kind of a trade? There are a lot of new age broking platforms which have just started introducing commodities for investors to trade on. We per se are quite positive on commodities as a space, given the fact of global geopolitics and the fact that pretty much all major economies want to have some amount of resource independence. We do think that that is going to lead to an improving commodity prices as an overall basket. So I would think that, there are these platforms that are looking quite interesting. The key aspect for us, like I said, is that how do we think about how much of it is already priced in and where are we in the cycle? And from that perspective, there are a lot of platform and new age companies which are just about, as they say in their parlance, getting into day 0 or maybe into day 1. So those are the ones that really interest us because unit economics for many of them are actually looking extremely good. There is very little competition in many of them. And therefore, we do think that, they can have a tremendous runway if one is able to get a good entry price into many of these franchises.
Okay. All right, Harish, I think on that note, we'll wrap it up. Thank you so much for joining in. Great conversation as always, good perspective and some interesting calls there coming through on IT as well. We'll keep that in mind. So, of course, Harish Krishnan there turning quite positive. That's Aditya Birla Sun Life Mutual Fund as a house turning fairly optimistic on IT services. We'll get to our next guest in just a second. Let's just quickly take stock of where we are. The market right now is cruising along quite nicely, recovering from yesterday's drubbing, 105 points higher. So it's not looking bad. Banks are actually doing very well, and so are mid-caps this morning.
Prashant, you asked a question with regard to air purifiers market, right?
We're back to the purifiers.
No. I mean, in terms of financials, the market size is 230 crores odd. That's as of 2023. And it's expected to grow at a CAGR of around 18%. By 2030, it should be at around 750 crores odd.
Annually.
Annually. In terms of a listed player, Eureka Forbes, I think, is low single digits as a percentage contribution. And the others are very, very small in revenue terms. But the market is, the penetration is less than 1% for air purifiers. So it could be a market that could actually explode.
The EMS players, as of now, the big EMS players.
Dixon has a tie-up, I think, with regard to it. It's just pulling out some technical research, and Havells.
It's just too small.
Too small.
Because, and think about it. When does demand spike? It basically spikes during crisis.
Yes.
Yeah.
When, you're hit by smog, pollution, headlines, right? I mean, I think October to December perhaps is peak. And then it kind of tapers off once again.
Yeah.
So, very, very small right now, of course. And also aimed at basically upper middle class and, that category of consumers. It's not a mass product in that sense, so to speak. Well, just a quick couple of words. A couple of stocks, basically. Capillary, right? We highlighted this in the morning with Devin. And then Hormuz had some data on this one. It's a recent listing, 4 days old in the market, 786% once again. It's the number one volume-led gainer at this point. I think came to the market at about 520 or so, I think was where it listed. I'm not sure the IPO price, but 780 now. And huge volumes. Sammaan Capital is coming up. It's the number two volume-led gainer this morning. Sammaan, of course, has had a big fall from, fell from 190 to 150 very quickly. It's back at about 160 right now. Number two volume-led gainer on the NSE. SAIL, Steel Authority of India. We were talking about steel with the steel secretary and with the analyst this morning. 4% on SAIL, 138. Big volumes. Doesn't come up at the top of the volume list, but it is this morning. The Tata Investment Corporation, which basically is an investment company, it had this frenetic move higher. Just one-way move. Went up to about 1,200 rupees. From 1,200, basically fell to about 700, and it's now almost 800 right now. So that is Tata Investment Corp. What else? You've got Reliance Power, which is coming up with some volumes. Bombed out name, 38, 39 rupees. Fino Payment Bank is another one. What's happening here? So closed yesterday at 266. It's up 30 rupees right now. Fino Payment. And look at the volumes, almost 2 million shares on Fino Payment Bank at this stage. I was talking about GE Vernova yesterday. Again, of course, it's done phenomenally well. Last 3 months it's kind of been flat, but 29.45 on GE Vernova. LG Equipment, we highlighted how SBI Mutual Fund has picked up a stake, 4.5% here. So it's coming up. Tarsons is another one, right? So fell for a while. And then you had a big recovery yesterday. There was a clean-out trade. I think it was part of Nimesh's chatter list as well. Tarsons will come up. It's up another 5% this morning. So there is enough and more action in terms of single stocks, individual names out there. That's the one I'm talking about. Look at volumes come up as well. But I think we've got our first corporate on the show, post-market open, that is. Sriram Finance. Surabhi.
Yeah, absolutely. Plenty to talk about, as always. And we have Mr. Revankar joining in. Executive Vice Chairman of Shriram Finance. We need to, of course, discuss a lot of the points in the business in the second half. We need to understand how margins are looking because Mr. Revankar has been telling us that maybe second half won't be as bad. In margins maybe inching higher. We'll discuss the AUM growth prospects as well and whether they're looking to increase their guidance. And, of course, whether the company is well capitalized at this point to support growth. Mr. Revankar, good morning, sir. Great to have you in. Now, I have to start with that third question. And I know we've asked you this in the past, but you please bear with me. Because the market excitement and speculation refuses to die down, sir. So can you set the record straight on whether Shriram Finance right now at this point in time is in any sort of discussion for raising capital? About 3 weeks back, there was a lot of chatter around a Japanese entity that Mitsubishi UFJ will perhaps put in as much as 20% or will buy as much as 20%. Can you just set the record straight, sir, on this?
There is no further change in the information that I can give you right now. So I don't think there is anything to talk about it now.
No, but are there any conversations ongoing, sir, with any entity with respect to any sort of an equity tie-up or any sort of an equity deal?
See, there will be many discussions going on. I cannot be talking about it. So there will be always some interested party who are, as you are rightly putting it, India is attracting a lot of capital, both for the debt and the equity. Everyone is seeing India as a large economy growing well. So that is where the interest levels are very high. And that is likely to continue.
Mr. Revankar,
Just a point on this. Now, what you've said is that discussions are always underway, but you're not giving us anything specific at this point in time. And obviously, foreign entities are showing a lot of interest. Middle Eastern entities, Japanese financial giants have shown already interest. But can you tell us whether Shriram Finance at this point in time wants to raise more capital? Are you looking for an equity partner?
See, we are at 20% plus on CRAR, so we don't really need capital for the growth. Whatever for the growth required for next couple of years, we have sufficient capital. So I can't disclose beyond that.
All right, Mr. Revankar, good morning. Good to see you in. Everyone's talking about, this deal. But just to get some clarity, the last time you said there could be multiple discussions that are taking place, but not a concrete plan. So there are still multiple discussions taking place?
See, as a NBFC or a bank, you always need to look for raising capital, both equity and the debt. So that will continue to be there. So it is not one-off event for the NBFC or bank. So this is raw material for us. So that will continue to be there.
You know, the analyst community believes that Shriram Finance trades at around ballpark 2.1, 2.2 times or thereabouts on the forward basis. One of your competitors, Chola, for example, trades at 4.5 times. Don't you think it'll be a perfect blend? You know, you get a good foreign investor coming in there and there could be a re-rating of sorts. Has the thought come to your mind, sir?
I think you're acting as an investment banker. So there are a sufficient number of investment bankers who are coming with various ideas.
Okay. All right.
But you're talking. So we go back to where we were 2-3 weeks back when we spoke to you. Shriram Finance is in discussions for potential equity fundraise, but nothing concrete as of now.
So as I was telling you, we have been talking for a long time, not now.
Okay.
Okay.
And do you think a deal you're reaching, I mean, there's progress with regard to these conversations?
Nothing to comment right now.
Okay, all right. Let's leave it at that then. But the street believes, if you go to most of the conferences, the buzz is very, very high with regard to Shriram Finance and a possible deal that's going to be in the works. Let's track business then. How has growth been? If you could help us out, with regard to the CV space. What's the outlook out here for the year? Just revise the growth target. And I think you were talking about NIMs improving as well for the latter part of the year. So let's revise both those two numbers first.
Yeah, definitely, yes. The October was a big month and there was a lot of activity. The most pleasant part of it was the demand coming from the rural market. So the rural market is actually, the demand is much faster than the urban right now. And I believe with the government now have cleared some of the infrastructure project in the last cabinet meeting, there will be a much bigger thrust on the infrastructure part of it. And that will help the growth coming back in the urban area also. So both an urban and rural put together, the demand should be much higher. So we believe the growth can be much higher than the guidance given. We gave the guidance of 15%. We should be growing at around 17-18% if everything falls in line.
Got that, Mr. Revankar. Good morning, sir. Thanks very much. I mean, I think a masterclass in answering, not answering or answering questions, but I think it's also fair, right? You're always talking, NBFC always needs capital, so that is there. We'll wait for the deal when it finally happens. I just want to ask you, what is the liquidity situation, if you will? There is some buzz that the RBI would perhaps. It's a strange kind of situation. The RBI and one thought that there's ample liquidity, but then there is talk that maybe RBI may come back with OMOs, may need to do OMOs, etc. Just your thoughts, sir.
The liquidity is quite comfortable right now, but yes, the NBFC industry do feel that there is a challenge on liquidity to them. So, because especially smaller NBFCs in our meetings, association meetings, they keep raising the issue and they want to have some kind of a refinancing arrangement for them so that the business can be smooth. Because everyone wants to have a growth at a particular rate. So the continuous supply of the credit is important for the NBFCs to continue to grow their business. So in that way, yes, they need to look at a different liquidity or different way of borrowing other than the bank. That is something which we have been debating. Otherwise, I feel the liquidity is comfortable. We are able to raise resources and the interest rates also are improving in the sense we are able to raise at maybe around 20 basis points lower than the previous quarter. So that is a positive step.
Incremental cost of borrowing is 8.3%, sir?
Yeah, now it's around 8.15. It has come down.
Okay, and you're on record, I think you told us this earlier as well, that you aim to bring this lower through a couple of initiatives. Yeah, and that this may go back to the first question about deal, etc. as well. Who knows? It could be all be tied as well. Now two specific areas. CV loan growth, you were expecting it to be a little ranged, and on MSME, you seem to be indicating that you're going slow on growth there, at least for the next few quarters. Could you talk to us about both?
Yeah, MSME, yes. I have been talking to few of the industry association and also to some of the customers to understand what is the actual impact, because some of the industries which have direct exposure to US, they have slowed down. But some are also looking at new markets, and people are now looking at Asia market and Europe market to diversify their overall export market, and that's a good thing that our people are able to start looking at the newer market and keep growing. Meanwhile, domestic demand is very good. So maybe because of the festive demand, the October, most of the MSME segment, they had a full book order, and maybe the November end we should know. But November looks like the numbers as of now that year on year it is flat. And of course, October to November, we can't compare. The year on year is flat, it's not really grown much. So we need to really wait till the quarter end to see the full results.
So MSME growth, November to last November is flat, you're saying, so far?
Yes, overall, their sales and their turnover.
Okay. All right. Just a quick word on MSME, sir. As a percentage of your book, I think it's around 15%. Could you give us some more clarity? How much of the MSME book is exposed to the export sector? And how is the asset quality faring?
It is hardly anything, very small, because we have been focusing on small ticket.
Okay.
We have never been lending to the mid corporate, like 100 crore plus. We have never done any such lending. So our exposure is small, very small. Out of 15%, maybe 10% of 15%, there's 1.5% of my book should be with the export linked the MSME. That's all.
All right. And ROA exit rate for the year should be approximately 3%?
Yes, we always aim at 3%. We are at around 2.8 now. We should be inching towards 3% by the year end.
Okay. All right, so we'll leave it on that note. Thank you very much for joining in. Always a pleasure speaking with you. And thank you very much for giving us more clarity on how business is shaping up and how the second half is, which perhaps is going to be even better than the first one. We'll take a break on that note, come back on the other side, and we'll have the management of Brigade Enterprises joining in. We'll look at the demand trends in the real estate sector.
Welcome back. This is Corporate Radar. Quick check on the markets. Well, we are at the high point of the day. December has started off on a good note. We're up 180 points or thereabouts. The bulls will want to end 2025 with a flourish, and the start of the December series has been quite good. That said, let's turn our attention to the real estate space. We have Pavitra Shankar, the MD at Brigade Group, who joins us. Hi, Pavitra. Good morning. Always a pleasure having you on the show. Thanks a lot for joining in. Well, let's focus on a couple of numbers then. I think for the year, in terms of pre-sales growth, you're targeting around 15 to 20% for FY26. What makes you so confident? Because the first half of the year, I think it's low single digits, 3% or thereabouts. So are you confident you get to that mark of 15, 20%? And also give us a sense about what is the contribution coming in from, of sales coming in from new launches?
Hi. So what is happening this year is, I would say, fairly similar to the last few years, where our contribution from new launches is quite heavy in terms of the overall target and therefore achievement as well. This year, in the first half of the year, we have done about maybe 40% of what we would like to do for the annual target. And I would say that's in line with what has happened over the last couple of years. So typically the approvals, launches tend to get pushed a bit, and we tend to see a lot of large launches coming in the second half of the year, not just with us, but with some of the other listed players as well. So we're making sure that all of our approvals are, being tightly monitored, and whether it is in Bangalore or Chennai or Hyderabad, which are all our markets of focus, our teams are geared up to do that. In terms of demand on ground, it is still very good. Our portfolio is skewing more in terms of premium inventory, which is where the market has been showing a lot of demand of late. And our new launches are reflecting that, as well as some contribution from mid-segment as well. So I think overall the launch outlook is good. It's a matter of getting the approvals in time. And once the launches happen, they are generally seeing pretty good response on ground.
So you're sticking to the 15, 20% growth, right? Pre-sales growth.
We would like to do that. As I said, again, it's dependent on the launches happening in time and getting RERA in time so that we can actually take the bookings into this financial year, since we are looking at it on an annual fiscal year basis. But on ground per se, if it slips into this quarter or that, nothing is impacting the demand situation. But naturally, on the numbers basis, we need to make sure that it enters into this financial year.
And out of the sales that you've done, how much has come in from new launches as a percentage?
Around 40% has come from new launches based on the launches that we've had in the first half of the year. Some of it was also very high-end inventory. So based on that, we've had about 40% of our numbers come from new launches.
All right. Pavitra, the other point, we get back to your financials and the way you see your business shape up. But what came over the weekend was the new labor law codes, right? And that could have some impact in terms of cost. For you as a company, how do you see it impacted, in terms of employee cost? How much does it go up by? Point number one. And as a percentage of the total development cost, what would it be? I think most industry experts were suggesting low single digits increase. Your take?
So we're yet to go through in full detail in terms of what actually comes through and study that. For us, the labor cost or the labor code changes impact not just on the corporate side, but also on construction labor. So we're still going through that and understanding what the full implication would be. But overall, I think the reaction so far has been a positive one in terms of how things will get simplified as well. So we're looking forward to it.
Pavitra, hi. Good morning. A slightly broader question, and it's great that we have you today, because in the morning I was going through a note that one of the brokers wrote, Nuvama. We're talking about over pan-India position. I think this is a question that's being increasingly asked. Whether the real estate boom cycle is entering a midlife consolidation phase. And the numbers that Nuvama put out, Year-to-date CY25, sales value is up 6%. This is pan-India numbers. Launches are down 6%. And again, CY25 sales overall are down 13%. Launch volumes are down 10%. And therefore, the question, I'm just placing the numbers for context. In your core market, in Karnataka, in Bengaluru, are you seeing any signs of this mid-cycle slowdown?
First of all, I think I prefer the word consolidation as opposed to slowdown. We've seen a fantastic ramp up, I think more than anyone could have even dreamed or imagined, supported by the best of conditions, including interest rate, demand from customers, all of that, and structural growth in the sector and overall economy. We have seen a huge ramp up also in terms of prices. Again, specifically in Bangalore, since you've asked me, prices in our own portfolio has more than doubled. It's a mix of like to like as well as product shift as well. So I think overall the premium and high-end segment have seen a lot of demand already, and that is where we see things stabilizing. Naturally, once ticket sizes go from 1.5 to 3 CR crores plus, you do see that demand consolidating. It is still there. But in terms of expecting a premium project where all the ticket size is 3 crore plus to sell out within the first month, those I would say are irrational expectations, and also that's not happening on ground today. So we are seeing that kind of stabilization happen in the premium segment, but mid segment is still extremely healthy. Those launches are doing really well. So I think overall it is a matter of developers also readjusting what the product portfolio is going out today in terms of the design brief and so on to our teams, and understanding the kind of demand on ground. So it's still very good. Pricing has doubled. I mean, we hear that every day. So that is a challenge for us to expect the same kind of absorption with those pricing levels. But overall, I'd say the market is still doing very well. We're very confident of launches, especially in the mid segment and the slightly, mid, what I would call the premium sector. But expecting things to sell out in the first month is difficult to continue.
Maybe we're past that, that stage of the cycle. So what you're saying is interesting, that that maybe on the pricing front things are moving towards consolidation, especially in the super premium segment. So this outlook that you've just given us, 15 to 20% growth in pre-sales, this growth will largely be a function of higher volume. Would that be safe to assume, rather than any major pricing spurts? And if you could just break down the pricing trends between, whether there's consolidation at the premium end, whether in the mid-market segment, whether you still see scope for price increases?
See, I think overall the pricing expectation of what happens at launch through the life cycle of the project is pretty much stabilized. Whether you are looking at mid-segment or premium, it's not in a price discovery phase for a developer, which is what it was in the last couple of years. More so like 2 years ago, when we would launch a project and then not realize that the demand was there and people were willing to pay that much more. So overall, I would say regardless of what product is being launched, everyone has a good understanding, that is to say the customer and the developer, in terms of what pricing one should expect. So I don't see a double-digit kind of increase going forward in terms of pricing. Therefore, for all of us, I would say the numbers would come from overall volume of launches and total inventory that we're able to launch and sell, rather than huge price jumps.
Okay. Quick final question, Pavitra, in terms of just the kind of money that you'll put to work into the second half of this year and going into next year, because you have a lot of launches on the office side planned as well. So just leave us with some ballpark numbers in terms of, the investments, whether it is land acquisition or some of the office side build-outs that you'll be undertaking.
Yeah, so, on an annual basis, we've been spending upwards of 1,500 crores on land acquisition. It's a combination of across all our sectors, so residential, office, hotel as well, but predominantly residential and office. And it's a mix of joint development as well as outright purchases. We expect to see that number continue to increase, because despite the consolidation, we are still very bullish on the market and still intend to be aggressive in terms of acquiring corresponding land in our markets of focus. In terms of the office and in terms of our office capex, we have about 1,700 crores of capex overall in terms of what is under construction, in which we have already spent about 700 crores or so another 1,200 crores to go in terms of our office portfolio where we are under construction. Some of that will be for sale, but a lot of it will be for leasing.
Pavitra, so good to speak with you. Thank you very much for joining us and running us through the latest as far as Brigade and the environment you're operating in. Thank you. Well, I think the markets moved up, and how, right? 200 points on the Nifty. And that is the story, actually. It's a vertical 90-degree kind of sort of takeoff which has happened. And what's the time now? I think it's 10, right? Past 10, little past 10. 9:40, 9:42 is when the pickup started. We were at about 26,000. Basically, we were at 26,000. And in the last 15 minutes, another 80 points on top of what the market opened up with. So this is a very, very good looking screen. And it also means that we basically bounced exactly from the 20-day moving average. Yesterday, there was a touch of the 20-day moving average. And then the market closed just 15 points off it, above the 20-day. So you've hit that short-term important kind of moving average, and then you've bounced very, very sharply. The new listing at the bottom of the screen also is something I'd like to address. Excel Soft Technologies is listed, and it's listed at 135 rupees. They sold stock in the IPO at 120 rupees per share, and I'm sure we'll have the management come up a little later to talk to us about where they're seeing the outlook going forward. Steel is the story. If you look at the Nifty stocks, JSW Steel, and I highlighted SAIL in the broader space earlier with large volume-led gains. JSW Steel is up 3%. So 1,147 on JSW Steel is what you have. Number two is, I'm just looking at the Nifty stocks. Adani Ports is the number 2 position. You got Trent, which is up about 2.25%, and HDFC Life and Tata Motors Passenger Vehicles is up 2% each. So it's a pretty good-looking screen. Except, actually, on the Nifty, there is just one name, which is at the bottom of the screen, which is Bharti, which is down. Otherwise, it's a all-up kind of a day, at least as far as Nifty stocks go. Even in the broader markets, it's 4:1 advances to decline. So that is also picked up substantially. 2,000 up and about 550 stocks which are lower.
I think the market is undoing all the pain that we saw in the last 3 sessions, to be precise, because getting into an expiry day, sometimes you see some kind of adjustment. So all that is getting unwound, so we're back at around 26,100, and the breadth of the market, that is encouraging. As Prashant as well was talking about, towards the end of the year, there is some P&L protection that you're looking at. So there appears that a churn has taken place, and now hopefully, in fact, the broader markets as well want to participate, which will help portfolios feel good. And a word on the steel stocks, there is hope that safeguard duty will finally be imposed. And the second factor is, now the street is a little bit more bullish with regard to getting a rate cut coming in from the Fed. And then hopefully the RBI as well has some headroom. When you see, the dollar index that was at 105 has come down to around 99.5. Softening of the dollar index is good for metal stocks. And that's why I've seen the metal index
Nigel,
as well. That's up.
My indicator for India-US deal,
Gokul Das exports.
So it is not the India-US optimism because Gokul Das is flat. I mean, it's got nothing on it. It's up 0.15, so 925, while the markets sort of picked up quite a bit. So it looks like technical factors bounce off important level. There's a 20-day, etc., which is at play. Vinay Rajani is with us of HDFC Securities. Vinay, good to have you with us here. Good morning. What would you do, and how would you read? Would you trust this price action? And on the back of it, what we're seeing, where would you find trades?
Yeah, good morning and thanks for having me on the show. So definitely there has been a good development, and since morning we have seen a nice recovery. If we go by the couple of observations technically, as you said, rightly said, the 20 days exponential moving average has been a strong support. And the another observation is that today's low is exactly open is equal to today's low. That means the sentiment since morning is positive, and this we usually consider as a very positive sign and bullish development. So today's low is equal to today's open. That is another positive sign. And today's movement is almost engulfing the 2 days entire bearish movement. So that is also a positive sign. Global market is supporting very well, and the setup is quite good. Large caps are definitely performing well. The another development is that in the starting of the December derivative series, we have seen a FI's long to short ratio at 0.18. That means as of yesterday close, the FI's holding more than 85% short positions. That means in that case, we can expect a limited downside, and there is a good chances of short covering in the coming session. So that is also a supporting one. So overall, we feel that the Nifty is about to cross its all-time high, which was placed at 26,277, and go beyond that. We see positional resistance at 26,500, and very strong support is placed around 25,800, 700 zone. So even if we see an intraday correction during the day, that should be utilized to go long. And overall, we feel that Nifty is headed for the new all-time high, and 26,500 should be the target for the Nifty.
Okay, all right. Vinay, that's as far as the Nifty goes. What about individual stocks? What are your trades now?
So we have been bullish on PSU banks, and Bank Nifty as a whole has outperformed in the entire November series, and for last 3 consecutive series, Bank Nifty has been doing quite well, and there has been long build-up also at short. So SBI is one of the stock which is the largest PSU bank and looking quite strong and continuously into momentum. So around 990, 994, one can go long. 980 should be the trading stop loss on the upside. I'm expecting a target of 1020. The second stock I would pick from the two-wheeler space in the auto segment, Hero MotoCorp, which has also broken out on the long-term charts, and looks like that after long underperformance in the two-wheeler space, now this stock has started outperformance with a higher momentum. So Hero MotoCorp can be bought around 6080, 5960 should be the trading stop loss on the upside. I'm expecting a target of 6265.
Okay, all right. We'll leave it there, Vinay. Thank you very much for all the trades. We have to take a quick break. On the other side, we'll have the commodity cues with Manisha Gupta. Welcome back. As promised, let's straight away head across to Manisha for the commodity cues of the morning. Manisha, what's the headline you're tracking?
Well, I'm looking at the agriculture commodities. You know, this has been a year when we haven't really bothered about agriculture as an inflation. That is because not just in India, but globally as well, we are looking at higher agriculture produce coming in. So a couple of commodities which actually have seen higher prices, but apart of that, everything else that comes under agriculture has seen a decline in sense of prices. I'll start with soybeans because you've seen prices gain up here, trading at near 16-month highs. And that is because the US weekly sales to China are at the highest since November 2023 there. But what the markets are looking at right now is that, one, China already has high inventories. The crushing margins have been on the lower side, and the US soybean is not competitive when compared to Brazil soybean. So how much will China buy from US is a bit of a question mark, and that is where the rally is getting stalled right now. The other one is cotton. Hasn't had a great year, this one, but at this point in time is trading at a one-week highs, and that also because the US weekly export sales have doubled on a week-on-week basis, and markets now seem to be believing and giving an 80% probability of a US December rate cut by 25 basis points, and that clearly has been supportive for various asset classes, including agriculture, industrial commodities as well. What is not doing well into the markets is rubber, trading at a two-week low. The Chinese demand has been on the weaker side, and the European Union is right now delaying the deforestation regulations and perhaps revising it as well, and that is what has led to decline in prices. Palm is another one, trading at a 6-month lows right now. It's to do with the ringgit as a currency as well. But apart from that, the major producer of palm, which is Malaysia, is looking at the October output at the highest in last 10 years. And when you look at their inventories, they are the highest in 6.5 years as well. So there is no dearth of palm when it comes to Malaysia. Wheat is another one. India is looking at a very good crop, and so is everybody else in the global markets. So that is the reason you have wheat trading at a 1-month lows, and the global inventories and global production are at a record highs. The other one is coffee, trading at a 1-month lows yet again. US has removed 40% of tariffs from Brazil, but this is being done for green coffee and not for instant coffee, and that is what is bothering Brazil there. Also, if you look at the overall markets then in this year, you will see that barring a couple of agriculture commodities, everything else seems to be heading for a negative 2025. So as I said, soybean has done quite well, 13% of gains onto that one. Sunflower is up by 10% as well, and that is exactly where the gains stop. It's a 5% decline for rapeseed and 10% down for palm oil as well. That is what edible oil sector looks like. Now, this is what we're looking at in sense of grains and cereals. It's a decline across wheat, corn, and a 27% of decline for rice as well.
Take a look at the industrial agriculture commodities, which comprises of rubber and cotton, and you're looking at a 12 to 10% of a decline here as well. And then comes coffee and sugar. So while coffee seems to have done quite well, up 29%, sugar in the international markets is down by 23% in this year.
All right, Manisha, thanks very much for that. So that's commodities in focus. We'll take a quick commercial break here. On the other side, it's our special segment is the economy. Lata in conversation with Manish Sabharwal of TeamLease, Somraj Roy of CEAT, Atul Gupta of Trilegal, and Amir Basole of Azim Premji University on the impact of the 4 labour codes on corporates, job creation and the economy. Coming up.